Maybe you just want to start off with an interesting kind of clarification on what you guys do. You no longer insure P&C with regard to homes. You're still active in autos, but you have a very kind of specialized approach to auto in that business. What types of clients and products do you cover on the auto side of things?
Sure, Dom, and thank you guys for having me this morning. So excited to be with you. We love our business. We're a specialty insurer. You know, most of us think about auto insurance, and we think about sort of the normal two cars, two homes, standard driver. We deal with specialty auto, high risk drivers, folks who might have some accidents, convictions. They may occasionally lapse a policy for a billing reason. Difficult geographies where there might be a high level of fraud and abuse, or difficult regulatory challenges, places where a lot of other carriers just want to stay away because it's different. We actually embrace the difference, embrace the challenge, and bring a specialized set of capabilities and character or strengths into that place to where we can really outperform the market over the long term.
Some folks characterize that kind of insurance as subprime in terms of auto insurance and clientele. Is that fair to say? And if so or not, how exactly does that business impact your overall results? How much more difficult is it to manage around a client base like that?
So people do call it subprime. You may think of it somebody who's got a higher propensity to have an accident as being, again, an extra challenge. For us, we find that we embrace that, and that's actually all our systems and our capabilities are built to do. In the more standard and preferred end of the marketplace, people are dealing with more general items, and our type of the business is an exception processing. Exception processing for any business becomes a significant challenge. For us, it's not an exception, it's the rule. And because of that, all of our claim systems, our billing systems, our underwriting systems are specialized and built around that client base. So for us, it actually becomes normal, ordinary course. And what that does is we have a fair amount of size and scale in that business. We bring that expertise. There are other bigger players who write some of it, but because it's not standard or an exception for them, we can outperform them over the long term. And really, it provides a great niche and specialty for us, and a very significant size of the market. It's probably about 25 to 30% of the overall auto market, where we really bring that unique expertise.
Joe, you also you not only insure those specialty type clients, you also have a business insuring business related clients, commercial related clients. I wonder if you might be able to give us some color around just how much the auto industry, auto insurance, replacement costs, and everything else that goes into it is being affected by what's happening with tariff policy or tariff uncertainty. And is that impacting your business and outlook as well?
It's a great question, Dom, and it's really one of the things that's really misunderstood when people look at our company or look at auto insurance in general. We do have a very robust commercial vehicle business. Again, it's very much in that specialty segment, small consumers, sole proprietors in these niche areas. But when you think about an auto insurance accident, most of us think about the crushed metal. In reality, 50–60% of the loss cost, the payouts we have, are related to bodily injury, some sort of injury to a person, or components around that. Of the 40% that's related to the actual accident itself, only about half of that's related to the metal, the actual physical cost of the car. The balance is things like body shop labor or towing, storage for the vehicle, other things that aren't parts related. So for us, maybe 30% of the loss cost is tariff related. And even in that case, a lot of the vehicles, you repair the parts, you use aftermarket parts, or you use salvage parts. So really, it might be a couple of percent of overall inflation on our total cost base. So I think many of us hear tariffs, start to get concerned, start to think it's going to cause some huge anxiety. And I'm sure that's some anxiety certain investors have around our stock. They're just misunderstanding a little bit that it will take a meaningful amount of time to work its way into the auto business, and it will work much slower than people expect.